This is Anarchast.
Welcome to another edition of Anarchast, your home for anarchy on the internet. Today we're talking to Chris Horlacher. He's coming in live and direct from Toronto, Ontario, Canada. Chris is a bullion dealer and he's also a professional accountant. And we met recently at the Montreal Investment Show, and he was working at the Mises booth, Mises Canada booth, and we got to talking, and he's an anarcho-capitalist, and we thought we'd have him on. So welcome to the program, Chris.
Thanks for having me on, Jeff.
Oh, it's our pleasure, and everyone knows what I'm going to ask first. How did you become an anarcho-capitalist?
Well, I guess it really started, when you think about anarcho-capitalists and people who really understand what a stateless society is all about, we're generally always that way, and we just kind of happen across an author or some sort of public figure who just kind of crystallizes it for us, and they put it all together. So for me, I guess that road started at about 2007 when Ron Paul started his presidential campaign. And through him, I basically became aware of the Mises Institute, and I decided to check them out and see, what the intellectual force was behind his campaign, because I would listen to him, and he was making a lot of sense to me, and I couldn't really find fault with anything he was saying, and I wanted to understand sort of his philosophy and principles behind what was guiding his positions. And so that's when I found out about the Mises Institute. And basically that began my 5-year re-education in economics. I had taken a couple courses in university and never quite could make heads or tails about what they were saying. They were basically trying to reduce all human behavior to a set of equations that they admitted barely worked and had almost no predictive power at all. So if they know the system is broken, why bother teaching it? But I guess that's what government subsidies do to universities. But anyway, so I started reading a lot about capitalism and history and economics, and I really found that the history of the world is written by economics, and it's more or less determined by the rise and fall of currencies, and that really gaining an understanding of the monetary system we live under, how money is created, how the fractional banking system works, really completed, I guess, my awakening to being a full-fledged anarcho-capitalist, because I guess as an accountant, I was able to decode all of the jargon that central banks put out, and it doesn't fool me, and I basically went straight to the horse's mouth when it came time to figure out how the monetary system worked. And so I was reading Federal Reserve technical manuals on money creation and this, that, and the other thing. And so after I basically figured out how the whole big giant pyramid scheme worked, I realized the immensity of it, but also the power of it. And the socialists were right when they said that central banks were the first step in gaining total control of the economy, and I would say a central bank alone lets you control an economy. I mean, just look at what has happened over the last 100 years. We've had 3 gigantic booms followed by 2 gigantic busts, and we're in the middle of the 3rd one right now. So I was just amazed at the predictive power of Austrian economics, and the history just proves that they're right. So it's hard not to be an Austrian economist after you read it and understand it. So that was basically what brought me into being an anarcho-capitalist, because I basically realized that we don't really need the government for anything. We can do all of this for ourselves as individuals working in a free market.
Yeah, I totally agree, of course, and I came about it sort of similar way into Austrian economics. I went through the tech bubble burst, and I lost a lot during that tech bubble. Well, I gained a lot, but then lost a lot in rapid succession. So and I was doing the same thing. I was searching around, and none of the stuff made sense. I even did take an Economics 101 class, and I walked out after the first day, and I said, well, this isn't what I'm looking for.
Don't blame me for that.
And But as soon as I started reading Austrian Economics, I didn't go really hardcore. I didn't read like really hardcore Mises theoretical stuff or anything like that, but just the general stuff. And I'd read things on Mises.org website and articles, and all of it just made such sense. And really what I call Keynesian economics is just wrong economics. And I don't even call Austrian economics all that much. I just call it economics. It's just the correct...
That's what it is.
Right.
I mean, when you go back to the beginning, you go back to John Maynard Keynes. Well, who was he? He wasn't even an economist. He was a mathematician. And he was basically all buddy-buddy with the Fabian socialists of the time. And the Fabians are the group that founded the London School of Economics, which was basically created around Keynes's theories on how to basically just continuously goose an economy with new money every time things aren't working out so well, every time the last stimulus failed. So when you read the general theory, he's really, he wants to basically just print money in expectation of somehow mastering the skill of inflation and permanently keeping the economy in a boom. And economist after economist has been trying this for the last century, and we've had more volatility and worse recessions, depressions, and things that people living in the 19th century never had to worry about. Back in the 19th century, there were corporations or companies borrowing money on 100-year terms, which is simply unimaginable today with the rate of currency debasement that's going on.
Well, they do try it every now and then. I know Mexico tried to launch a 100-year bond recently or something like that, but that's for totally different reasons. It's mostly just because they have no chance of paying it off if they do it anything shorter than that, and it's not because people have any faith that the Mexican peso will even exist, nor will Mexico as a country even exist 100 years from now. So we're definitely living in interesting times. And I know you live in Canada and you do a lot of research into the Canadian markets, and I believe you were telling me about your dealings with the Bank of Canada, the national bank, one time, and that was an interesting story. And I know you've looked into the Canadian housing market quite a bit, and for people who don't know, Canada's pretty much the last final housing bubble in the world right now, and it's according to Chris, he believes it's on the verge of collapsing. And then maybe you can tell us a little bit about that, Chris.
Yeah, well, my research into the Canadian housing market basically started at the time that the 2008 housing bubble burst in the United States, because I was just, I think that caught lots of people off guard, and I had only just begun researching into Austrian economics the year before, so I hadn't really heard much about the U.S. housing bubble about to burst. And when I saw it happen, I thought, wow, I really need to understand what happened here. And so I started delving into all of the little details and understanding how the U.S. mortgage market works with these giant government-sponsored mortgage insurance agencies that are insuring mortgages, buying up mortgages, and basically they created a system where there was absolutely no risk to the private lenders. And they basically, the banks would figure, it doesn't matter if this person is making any money or can pay it back. I'm going to loan it to them anyway because I can always reclaim the house in bankruptcy, which I'll turn around and sell at a profit. Or if I'm really worried and I don't want to be able to take this house, I can just turn around, sell the mortgage to Fannie Mae or Freddie Mac, and worst case scenario, I make the borrower pay for mortgage insurance, and then I'm covered either way. So that created a tremendous moral hazard in the U.S. market, and that, I think, was one of the primary driving forces behind the housing bubble. I think at the height of it, Fannie Mae insured about half the market. So based on what I learned about the U.S. market, I decided to take a microscope to the Canadian market and see, are there any similarities? And I was amazed because it's exactly the same system here with some minor differences. We only have one mortgage insurance company that's run by the government, and it's not 50-50 private-public. It's 100% owned by the government, and it's called the Canadian Mortgage Housing Corporation. And they do exactly the same thing that these other big giant mortgage companies were doing in the U.S. They securitize mortgages, they buy mortgages, they insure mortgages, they insure home equity lines of credit. So they do everything they can in order to get banks to loan money to people who want to buy homes. And going through the financial statements of the CMHC, I realized that here's a company that insures 90% of a market that's worth just over $1 trillion. So they've got about $1 trillion of guarantees on the books. And they've only got about $12 billion in capital to cover it. So the leverage in this company is absolutely off the charts. The other problem is the assets of this company are about 90% invested in those very same mortgages. Now, the problem there is if I'm an insurance company and I'm basically insuring against the default of a certain type of asset class, if I'm insuring against mortgage defaults, the assets I want on my own books to be able to sell in the event that I have to pay out a bunch of claims should not also be mortgages. I want my assets to be in a different asset class that I can count on them holding their value even when people are defaulting on their mortgages. But that's not the case. This company is almost entirely invested in mortgages, and they insure pretty much the entire mortgage market. They've got about $250 million in debt on the books that they have to refinance over the next 5 years. Now, just to put this in perspective, the entire federal debt, the national debt here in Canada, is about $560 billion. So this company carries about half the debt that our federal government carries, and then on top of that, there's another $1 trillion in contingent liabilities. So we're in for a real wild ride if our mortgage market takes a dive. And it's looking more and more like that is the case. Since 2008, our interest rates are about as low as they've ever been. Our debt-to-income ratio for the average Canadian is as high as it's ever been. It's about as high as it was in the U.S. and the United Kingdom when their mortgage markets started collapsing. So really, all that we're waiting for up here is a catalyst, and that could come in any number of ways. It could come in rising interest rates, which will cause people to basically default on their mortgages. The other thing that might happen is as the United States spirals out of control and their currency loses more and more of its value, what will happen is a large chunk of our export sector is going to get into a lot of trouble because we're very closely tied to the United States. About 3/4 of our exports go to the U.S. So if the U.S. can no longer afford to buy our stuff, there's going to have to be some major restructuring going on in those industries, which can cause layoffs and all manner of other things, business closures. And people losing their jobs are going to stop paying their mortgages, which is going to trigger the defaults and, I believe, the eventual bailout of the CMHC by the federal government. Because our government is completely on the hook for their debts. The U.S. at least had a choice whether or not it could bail out Fannie Mae and Freddie Mac. It made the wrong choice as far as I'm concerned. But the CMHC is a wholly owned subsidiary of the Canadian federal government, and they won't have a choice. If the CMHC can't pay its debts, they get tossed on the books of the federal government. And if they can't pay off their mortgage insurance claims, then that also gets tossed onto the books of the federal government. So we could have a lot of additional debt added onto the Canadian taxpayer over the next few years if our mortgage market has any troubles. And we're really riding on the razor's edge right now.
Well, it's a good thing that Barack Obama orders all his tour buses from Canada. He's helping out Canada there. Yes, we talk a lot about that at the Dollar Vigilante as well, about the state of affairs in Canada. A lot of Americans will go up there to open a bank account, or they think that, or they believe the US dollar will be collapsing sometime in the next few years, which we believe as well. And so they go to Canada and they open a bank account, they put their money in Canadian dollars, but not many Americans know that there's really nothing backing the Canadian dollar except for the US dollar. 99% of the reserves are in US dollars or euros, which is even worse. By the time this video makes it to the internet, the euro might not exist. And it has literally nothing in gold. They sold all their gold in the 1980s, 1990s, much as England did. They have about $140 million worth of gold, which is about a brick about like this big. And
I remember the
probably
picture you had
somewhere
in your presentation.
Yeah. Yeah, it's I did a picture which showed what it looks like to scale, and it basically is about that big, and it's probably somewhere in Stephen Harper's closet or something like that, for all we know. So yeah, it's very interesting. The future for Canada, I think, is very much tied to the U.S., and I talk a lot about that as well. And you just mentioned a lot of information about that. And my belief is that as the U.S. continues to collapse, which I believe it will, that it will bring down Canada with it. And if worse comes to worse, and the U.S. and the world stops accepting U.S. dollars, I believe the U.S. will take a serious look at taking over the Canadian resources. And at that point, who knows what will happen. You might see Canadians actually welcoming that with open arms, because things might be so bad in Canada that they want something like that. So these are some of the things that might be happening in the near future, in my opinion. Is that do you think along the same lines, or what do you think is going to happen in the coming years?
I think you're probably right about that. I mean, just look at what happened at our last not our last election, but the election that happened right around, we had an election here, I think, right around 2008 or 2009, and our current Prime Minister now, Stephen Harper, ran on the ticket that he would never run a budget deficit. He'd been in office for a while, and they had more or less balanced the books, and we'd been doing fairly well with that, but he ran on this ticket that he was not going to run a deficit, and then as soon as he gets into office, he caves and runs the biggest budget deficit in Canadian history. And the stimulus programs here are going to continue. They're not as huge as they are in the US, but like you said, our currency, along with pretty much every other currency in the world, is basically tied to the US dollar, because central banks all around the world are basically one giant pyramid scheme, and it's all built on top of the US dollar, and to a lesser extent the euro now. And then at the pinnacle of this is the Bank for International Settlements, and they act as sort of a clearing system for central banks, for them to basically swap money around. But yeah, this was one of the things I touched on when I was making my presentation about the Bank of Canada, and if anybody's interested, you can Google the birth and death of the Bank of Canada, and you can also find it on the Mises.ca website. But yeah, all the major central banks these days have these things called exchange fund accounts or exchange stabilization funds, and these are big giant slush funds that governments basically, they use it in order to stabilize the external value of their currencies, and they have to do that because legal tender laws don't apply to foreigners. So they have to have something in order to incentivize foreigners to want to use their money. And in Canada, our fund is basically entirely invested in US dollars, euros, and to some extent SDRs, which are issued by the IMF, and they're basically like an uber currency. They can be switched very quickly into pretty much any other currency, any other government that's participating in the IMF. So as the US and euro go down, that necessarily is going to collapse the external value of the Canadian dollar. The Canadian dollar can always make Canadians accept it for value, because that's what legal tender is. But the collapsing US dollar is going to wreak absolute, I hate to use the word, but monetary Armageddon on the foreign exchange markets, because nobody will be able to trust the value of these currencies anymore, because they've all been built on top of US dollars, US dollar denominated debt, euro-denominated debt. And what are the currencies today that seem to be having the most trouble? It's the US dollar and the euro. And we're in the middle of one of the biggest bond bubbles the world has ever seen, and it's all in US dollars and euro bonds.
Yep, that's a lot of stuff I talk about as well. I used a chart there in Montreal showing the change in prices of numerous things since 1980, and many of them, like a dozen eggs, have gone up 400%. A new car has gone up about 350%. A new house, the same thing. Gold and silver have gone up anywhere from 150 to 250% since 1980. But the total amount of U.S. government debt has risen from 0.9 trillion in 1980 to over 15 trillion today. So it's gone up 1,500%. And it's doing nothing but accelerating. So yeah, I believe we're nearing the end of this monetary system. And it's going to be very interesting times ahead, and I'm sure as much as it might be kind of scary, we're also looking forward to them because we have been studying this stuff for so long. We've been expecting this, so for us it's a little bit of good with the bad. We definitely don't enjoy all the turmoil, but it actually is a good thing for this monetary system to collapse. It's been a terrible monetary system. It does nothing but impoverish people through inflation, and basically you couldn't have any wars without fiat currencies and central banks, because every single country in history that's ever gone into war stops backing their dollars by gold or their currency by gold because they just can't afford it. And so there's no way to afford wars without these things. So if we can just get through this collapse and through to a more free market system, we'll have peace and prosperity on earth like we've never known it. And that's all the time we have right now. So I'd like to thank you very much, Chris Horlacher from Toronto. It's been our pleasure to have you on the show.
Mine too. Thanks, Jeff.
Oh, our pleasure. So thank you very much, Chris Horlacher, a bullion trader and a professional accountant in Toronto. And he's involved with Mises Canada, Mises Institute of Canada. He was at their booth in Montreal helping them out. And check them out, Mises Canada, if you're in Canada. And if you're anywhere else in the world, check out all the other Mises. There's Mises organizations in almost every country now. That's basically the place to go for Austrian economics information. So that's all for today. Thank you for joining us. Peace, love, and anarchy.